Whether you're a home buyer or a retired person, or even a small business owner trying to expand, this term holds very much importance in your financial decisions. Yes, interest rate on your loan, or interest rate you earn on your deposits with the bank. Let us learn how is interest rate decided and what significance it carries in the banking system as a whole.
Ever wondered what an interest rate really is? Well, let's demystify it. Imagine you're in a bustling marketplace. The interest rate is like the price tag on the money you want to borrow. It's the cost you pay for the privilege of using someone else's money. On the flip side, if you're the one lending the money, like when you put your hard-earned cash into a savings account, the interest rate is your reward. It's the earnings you get for letting others use your money. These rates are usually expressed as a percentage of the principal, which is the original amount of money borrowed or invested. So whether you're taking out a mortgage to buy your dream home or simply saving for a rainy day, the interest rate is a key player in your financial journey. So in short, interest rates determine how much it costs to borrow money and how much you earn when you save. Did you know there are different types of interest rates? Indeed, let's delve into this. First, we have fixed interest rates, which remain constant over the life of a loan or investment. Then, we have variable rates, which fluctuate based on changes in the market or an index. Lastly, there's the prime rate, often used as the benchmark for other rates, typically offered to customers with the highest credit ratings. Different types of interest rates can apply depending on your financial situation and the type of loan or savings account. Have you heard about real and nominal interest rates? Let's break it down. Nominal interest rates are the ones you see advertised. Say a bank offers you a 10% interest on your savings. That's nominal. But what about inflation? Here's where real interest rates come in. If inflation is 2%, your real interest rate is 8%. That's your nominal rate minus inflation, so you're effectively earning less than you thought. Remember, real interest rates account for inflation, while nominal interest rates do not. Ever wonder why interest rates fluctuate? Well, there are several reasons. First, we have the spread, which is the difference between the interest rate charged by lenders and the rate paid to depositors. Then there's risk. Higher perceived risk often equals higher interest rates. Inflation too plays its part. As prices rise, so often do interest rates. Lastly, there's liquidity preference. The more people prefer to have liquid assets, the higher the interest rates can climb. These factors collectively determine the rise and fall of interest rates. How about yield and interest? Are they the same? Not quite. You see, interest is essentially the cost of borrowing money. It's what you pay to use someone else's funds. Yield, on the other hand, is the total return an investor gets on an investment. While interest is the cost of borrowing, yield is the total return an investor gets on an investment. Did you know there is a banking system where interest is prohibited? This is known as Sharia banking, which views interest as usury and therefore not permissible. This form of banking instead focuses on profit sharing and joint venture agreements.
We plan to make another video on Sharia banking system. Are you on the receiving end of interest income or paying interest on any loans? Or perhaps both, as is the case with a common man? Let us know in the comments. So long.